Welcome back to another vlog, and today our topic is Netflix and grill, because the stock of Netflix just get grilled right now. Oh my god, as of this recording, minus 11% because they just missed expectation of subscribers grow internationally by big time, guys. I'm telling you, big time. So smash that subscribe button and here we go. I just recently made a video of Netflix, the history and everything about the stock that you have to know, how successful it was. So I will put this in the description as well. But let's run some numbers here. So 11% down for the stock today. They released following numbers. So earnings per share, EPS, 60 cents per versus 56 cents expected, so that's a beat, that's good. But now here we come. Revenue 4.92 billions in the last 3 months in Q2 versus 4.93 expected. So basically they hit it on the spot to what the market expected. But now coming the bad news. It's basically domestic, so US paid subscribers was a negative of 126,000 users, and it was expected that that there will be over 352,000 subscribers gain. So that's the very big miss. And the second very big miss is paid international subscriber growth was only 2.83 millions versus expected was 4.81 million users. So you can see internationally they flopped. US they flopped. This is very interesting because, you know, for Netflix the subscriber growth is very important, because this company don't make any money, they lose on money, they put everything they have, they take some debt and put it all in content. Hey Romeo, I'm vlogging here. What the hell? Wait, I think my cat has something to say here. And here he is, the guy that you was all waiting for, the cat behind the camera. Romeo, what do you have to say? Alright, then say it out loud. Thank you. Subscribe, guys. Okay, back to business, because this should not be a video here on YouTube where you click about the earnings of Netflix and you end up in a cat video. No, that's Wolf of Dubai, financial entertainment. Subscribe if you're new here, and let's dive into what Netflix has to say and to justify such a bad international growth. So what they actually saying is that the Q1 of Netflix was very good. So they have like a pullback of users because they don't have so much new content in this quarter. Therefore, you know, people unsubscribe and it doesn't grow so much. It starts to get spring, summer, the people try to spend more time outside and so on and so forth. They are expecting to grow much bigger in Q3 because there's new content coming, like the next season of Crown, or also the final season of Orange is the New Black. However, they also saying another very important part of this week Q2 international growth was definitely in countries where they rise prices. So they're trying a little bit, what is the right price, what are people able to pay, what are people willing to pay for the content. And that's why in some countries the people just said, hey, you know what, more than 10 bucks is not what I want to pay for a streaming service, and there's much more streaming service to come. So let's see what else we will find inside the earnings right now. So what you can really read beside the lines is that they are really depending on the very good content, and that's why they're spending billions every year into content, much more than any company in the world. This is very important. They try to focus on original content, so the content they can control, because they are also saying, you know, they will lose a couple of series from Netflix like Friends or Office, because I think it was NBC announced that they will take those series to their streaming services, you know. And also like AT&T Warner Media announced its new streaming service HBO Max will have Friends in their own streaming service. So of course they have to take it down. Netflix, by the way, paid around 80 million to keep Friends, but they decided to take it off soon. Another thing that you will see is that I mean, just by yourself, you see that if you're scrolling through the Netflix content, you always look for new movies. It's hard to find a series when they end. You can finish a series inside a season, basically a season in one day, you know, and then or 2 days, a couple of days, and then it takes another year to bring new content out. So this is, you know, this is the critical point where Netflix want to put as much as series out there, so keep us watching. That's very important. And movies, also they bringing so much original movies, their own content. This is very important for Netflix. And then I found something which is very nice. So the Chief Content Officer, so CCO, I like the title, Ted Sarandos, addressed that the shift from licensed content, so content that they actually buy from different content producers, to original content is very crucial, and that they focus is more there to do definitely some more original content. This is very important, and CEO Reed Hastings definitely confirmed that they don't feel any pressure from any competition so far, and these numbers are not the reflection of any competition. They say if other competition come, just make them more motivated to bring better content and more quality and own series and so on. So it's purely the reason that we discussed in the beginning of the video, and so he will actually see more and more transition from traditional TV to streaming. So they expect a very good quarter, the next one. So we shall see. Let me know what you guys think. It was a very nutshell Netflix Q2 earnings. I still think the company is quite expensive. You know, if you look into the stock, it's 11% as of this recording down for the day. That's a quite volatile action. Of course, you know, when stocks are priced so high, then any small dent in the success story, then the stock, you know, makes very big movements. You see that in very volatile stocks as well, like Tesla, for example, though Netflix is way bigger valuation, and people really think that Netflix will be a big thing. Valuation is very high. Let me know what you think, because this is very important. We vlog tomorrow again. Thank you for watching, and don't forget, the grass is greener on the other side, and I will continue here with my Netflix barbecue. So see you tomorrow.